Hi and welcome to the Market Alert for Wednesday, 25th of May 2022. So big tech and bond yields plunge as US macro snaps, gold gains. Snap goes the social media spend bubble, and crackle goes Fed credibility, and pop goes the economy. In other news, and also vindication, Glencore pleads guilty to decades of bribery and manipulation of the oil market and will pay 1.5 billion in fines. So again, as I said before, the markets are manipulated and eventually the criminals get caught. Unfortunately, they should be sent to prison and not given the fines. As food protectionism spreads, India limits sugar exports, Malaysia halts chicken sales as well. So this is starting to happen a lot across Asia. So keep an eye on this one as well. We're certainly heading for food shortages at this time. And here we can see it's not only food, but 1 billion people at risk of power blackouts as global grids are stretched. We really expect to see these problems get worse in the next 5 years, so no let up. And there you can see it in the graphic there, the most affected areas for this forecast. Also, in the UK yesterday, energy price cap expected to rise by £830 to 2,800 in October, says Ofgem chief. So again, more inflation, more expenses, along with the increase in food prices. There's not going to be any end to this in the short term, particularly with this where we're starting to see the protectionism of exporting foods. Other news today, Lagarde's speaking at 9 a.m, letting the criminal out. Then we've got a tentative stability review, and then 1:30 core durable goods for the US. And then we've got the FOMC meeting minutes to be released later today. Let's have a look at the Dow for yesterday. And in the Dow, you can see that prices managed to move higher once more, and we traded up to 62% during yesterday's session. A bit tricky at the open, but then the market found support and moved higher. We've got the 78 and the 89 to take out on the upside here. If the market doesn't hold, then watch the 5-bar moving average as the first target to the downside. In the 30-minute chart, you can see here that we had the sell-off. Now, I don't know whether this is a plunge protection team assisted move, but it has the characteristics of it, where the market was brought all the way back to the R1, which you can see there. And now this is yesterday's high where the market is currently struggling. So watch anything on the downside. The first target or main target is going to be the DP. We want to keep the market above the daily pivot. We have got the 5-bar and the 50 as well, which also ties in with this area. If we go through the high, then we go back to the daily chart, and we can see that we've got that 78% retracement here. In the German DAX, we're still in a bit of a choppy sideways move. Yesterday, the market too was recovered from the 20-bar moving average and moved towards the 50-bar moving average, where it has stopped, and is also now sideways, just trying to hold above the 5-bar moving average. In the 30-minute charts, again, you can see that we had a bit of a sell-off initially. The market then pulled back. We had the retracement, and then we traded back up to the close. The US opened, and the market sold off all the way down to the S2, which is a nice move. And then the market, along with the US recovery, whether it was PPT assisted or not, I don't know, continued to move higher. We've got a gap again, which has already been filled. So now it's being filled. We've got resistance here, and the market is free to move to the downside. The DP is the first area of support as pivots are concerned, and also the 50-bar moving average and the 5-bar. The market's currently, was until I unfroze the screen there, was holding, but it's now gone through. So the DP, crucial here. We go through the DP, we've got the 200 MA there, and also you'll have that tying in with an 89% retracement as well. So it was a good day yesterday on the markets, in particular in the DAX. You can see they're playing catch up. I didn't trade on Monday. We had a profit factor of 4.5, win to loss ratio 57, and 42 there, or 58, 42, or in that sort of region there. So yeah, it was a good day. You can see the equity curve moving to the upside quite nicely there as well. And in the GBP JPY, the market down yesterday, big drop, as you'll see in the 30-minute chart. We broke the DP area there, and then it continued to the downside down to the S3. It's rare to see a market trade to the S3 at the moment, but trading to the S3, 90+% of the time the market will bounce, and that's precisely what we've seen here. Market struggling with the DP there, and if we take out the close in the BRN there, we're free to move back down and retest yesterday's low. In the pound, this continuing to move up. It stopped at 89% yesterday. We've got some supply and a crossover in the stochastics, but the market is still holding above the 5-bar moving average at the moment. So keep an eye on the 89%, see if we can break this, and then we've got this high to the left here, which is 126.34. See if the market will hold at this level. And then finally, in the metals, starting off with silver, another day to the upside, but it's starting to look weak at the moment. That 62% retracement, and we're overbought, as you can see there. Crossover as well. I would expect this to start making its way back to the downside, as the dollar is also starting to find some support. Let me just redraw that for you. Just squeeze that up a bit. So from this low up to the crossover there, there's your 38%, which is yesterday's low. Look at that in the 30-minute chart. That's where we're looking at for the market to make its way back during today's session. It's not going to hold. They've managed to keep moving the market to the upside, but it's options expiration week this week, I think, for the silver. We had a shakeout at the usual 1 o'clock, but they managed to bring the market back. But as soon as we got way above the 22, they just absolutely hammered it and brought the market back. And I think that's where we're heading back down. Well, it's looking like we're heading back down to that level. Well, we've broken the 22 again now. Like I say, they don't want it above $22 as they go into the expiration week. And in gold, that's fine. That can continue to move to the upside. Also struggling at the 62% retracement, but a lot nicer pattern there to the upside. And this is going to be key today. You can see that we've got demand in the dollar. We're oversold. We're at 62%. So expect a move back to the upside in the US dollar, which is going to put downside pressure on the silver market. Okay, I think that's it. Oh, apart from crude oil, which is starting to break out of this sort of sideways pattern that I mentioned before. We've got the ascending triangle. We could see this breaking to the upside. If it does, then we're going to go back and have a look at the $138 per barrel level. Of course, we've got many other areas of resistance in between, but it's certainly looking bullish at the moment. Okay, that's it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.